Right, diving in. Today, it's leveraged investing land. Specifically, those ETFs, the 2X and 3X ones.
Oh, yeah, those.
You sent over these clips, a Taiwanese podcast and
Yeah.
a chart comparing how they perform. I got to say, I'm hooked already, especially since the podcast starts off talking about like investment personality.
Isn't that interesting? It's like before you even think about how to use leverage, got to know why you're even investing. Like, what's the motivator?
I feel that. Sometimes I get so caught up in the how-to that I forget to ask myself the why. It's so easy to just chase returns, but this podcast, they're saying understanding your risk tolerance is like the key.
Totally. They have this analogy, it's pretty clever, about leverage being like picking a path when it's dark out.
Okay, I'm looking.
Like there's the well-lit path. It's slower, sure, but safe. Then there's that shortcut, cuts right through the graveyard. Faster, maybe, but well, it is all a graveyard at night.
Bro, okay, that image is definitely going to stick with me. I mean, even if I knew the shortcut was riskier, that temptation, that urge to get there faster, it might, I don't know, cloud my judgment. Is that kind of what they're saying about leverage?
Exactly. They're saying those graveyard shortcuts, they're in the financial world too. Higher
Right.
leverage, it can mean gains come quicker. But the potential for things to go bad, it's amplified, let's say. And even if you understand the risks in your head when things go down, that stress, that fear, man, it can really get to you.
So it's more than just the numbers. It's about knowing yourself, how you're going to react when things get shaky.
Exactly. And this source, it doesn't just stick to financial leverage either. They talk about how we use leverage in other parts of life too.
Oh, interesting. Like a what?
Building a team, for example. It's kind of like leverage in business, right? You're multiplying what you can accomplish.
Yeah. Or like going back to school. That's like knowledge leverage, investing the time and money now for hopefully bigger gains down the line.
Right.
I like that. They're broadening this whole idea of leverage beyond just borrowing money.
Yeah, it's a good reminder. Leverage is a tool. And like any tool, it can be used, well, wisely or not so wisely.
Yeah.
But getting back to those ETFs, the podcast, they've got this really good example, shows how a 10% drop in the market would play out with different levels of leverage.
Right. They use that example, $100,000 invested in QQQ, that's the one that tracks the NASDAQ, no leverage involved, and then QLD, the 2X leverage, and TQQQ, the 3X. So a 10% drop, QLD would be down 20%, and the TQQQ, oof, down a whole 30%.
You got it. And that's where knowing yourself comes in, right? Are you the kind of person who can just ride out those big swings, or would that drop make you want to, I don't know, sell everything and run?
Seeing 30% down on my screen, yeah, I'd be feeling some anxiety for sure.
Good.
The podcast, they then go on to analyze how much each of these ETFs would need to gain to bounce back from that 10% drop.
And that's where the concept of volatility really, well, it hits home. You see, QQQ, it would only need about 11% to get back, which honestly sounds pretty doable. But QLD, that one needs over 22%. And
Right.
TQQQ, over 42% just to break even.
Hold on. So if I lose 10% on the 3X leverage, I need to make back almost 43% just to get back to where I started. That seems intense. Is that even like realistic?
Oh, it's possible. But the point is, with higher leverage, you need bigger gains to recover from those losses. And that brings us to that image you sent, the one comparing how the 2X and 3X leverage performed over time.
I'm looking at it now, and yeah, it's pretty clear. The 3X, it shows bigger potential gains, but the drops, man, those are way steeper. There's one section, the 3X is down almost 60%, while the 2X is down around 40%. Big difference.
Right. And while past performance, it's not a crystal ball, it does give you a visual idea of how these different leverages, they behave in the real world. They talk about it like building a portfolio, like, creating a balanced meal. You wouldn't just like load up on carbs,
Right.
Or only eat protein. Got to have a mix of nutrients to keep things running smoothly.
Gotcha. Okay. So in the investing world, those nutrients, those are like the different asset classes.
Exactly. You need that mix of assets, some riskier, some with more potential returns, some not. It's like this. Think of your core holdings, the foundation of your portfolio.
So that's like index funds, maybe some bonds, real estate, those investments that feel pretty solid, not going to disappear overnight.
Exactly. Stability, a base level of returns. The podcast, they suggest around 70% of your portfolio in these core holdings.
70%. All right, that makes sense.
Yeah.
But what about that other 30%? That's where the leveraged ETFs come in, right?
Not so fast. That 30%, that's for what they call satellite holdings.
Satellite holdings. Okay, now you're throwing new terms at me. What's the difference?
Think of them like the spice in your investment meal. higher risk, maybe higher return, things like, oh, individual stocks, sector-specific ETFs, and yeah, maybe even some leveraged ETFs in there.
Okay. So that's where I get to add a little excitement, aim for those juicier returns.
Could be.
But why not just go all in on the exciting stuff? Why bother with the core at all?
Remember that graveyard shortcut? Putting all your eggs in that high volatility basket, things go south, that could be rough. Keeping it smaller, it's like limiting how much you're exposed to those big swings.
Correct.
Mm.
Right. Balance, solid foundation,
Uh,
a sprinkle of risk for potential growth. But isn't this just like regular diversification?
yeah.
What makes this blended thing different?
Is diversification, yeah, but with like a strategic purpose, different asset classes, they have different roles to play in your portfolio, you know what I mean? The core, that's stability. The satellite holdings, they offer the chance for bigger returns, hopefully. And within those satellite holdings, you can diversify even more, picking assets that, fit your risk tolerance and goals.
Okay, so if I'm not really into big risks, my satellite holdings, they might be more on the less volatile side.
Yeah.
But if I'm comfortable with things going up and down more, maybe I'll put some in a 2x leverage ETF.
Exactly. And that's where understanding how these leveraged ETFs have performed in the past, that becomes super important. The podcast, they actually dig into the data looking at QQQ, QLD, and TQQQ going all the way back to 2010.
Oh, wow. So we get to see how those different leverage levels play out in the real world. They talk about, what was it, average drawdowns?
Yep, drawdowns. They found that QQQ, it had an average drawdown of about 18% during that time.
Okay.
But QLD, the 2X version, almost 37% average drawdown.
Oof, that's a big difference. And TQQQ, the 3x?
Get ready, it gets intense. TQQQ had an average drawdown of over 55%, same time frame.
Over 55%. That's huge. But that's just the average, right? There were probably times it's even worse.
Oh, yeah, absolutely. The podcast, they mentioned the maximum drawdown for TQQQ during that whole period, a whopping 80%.
80%. Seriously, who could handle that kind of loss? Isn't it
Mm.
kind of irresponsible to even bring up that level of leverage?
It's definitely not for everyone. That's why the podcast keeps stressing knowing yourself, making sure your leverage choices, they fit your risk tolerance and goals. It all goes back to that self-awareness.
Yeah, leverage can amplify returns, sure. But an 80% drop, that's terrifying. It makes sense why they spent so much time on that whole know yourself thing before even thinking about these strategies.
Oh, right. Right. It comes down to, are you trying to get rich quick or are you building something for the long term? Excitement or stability?
It sounds like you're saying this blended investing, it's a way to kind of manage those different desires. You get a little taste of those higher potential returns, but you're not putting yourself at risk of losing everything.
Yeah.
But how do you actually build one of these blended portfolios? Do they give any concrete examples? I'm really curious about that, how they actually suggest putting this blended approach into practice. Do they give any specific examples, like what a balanced portfolio could look like?
They do, yeah. A couple different approaches, but they stress, no one size fits all. It all comes back to, like we said, your goals and how much risk you're okay with.
Right, right.
One strategy they talk about, it's starting with, say, 70% in those broad market index funds for the core.
Okay, the solid foundation, tracking how the overall market's doing. What kind of index funds are we talking here?
They mention funds that follow the big indexes, like the S&P 500 or the NASDAQ 100, good diversification, and they tend to be, well, less jumpy than individual stocks.
Gotcha. So 70% there in those steady Eddie index funds. And that other 30%, that's where we finally get to play around with some leverage.
Not necessarily. Remember, the satellite part, that's for the higher risk, higher potential reward stuff. Leveraged ETFs are an option, but not the only one. You could do sector-specific ETFs too, like if you think technology or healthcare are going to do really well.
Oh, interesting. So I could have like a technology sector ETF in my satellite holdings, NED, a 2x leverage NASDAQ 100 ETF, like diversifying even within that riskier part.
Exactly. And they really emphasize you don't have to use leverage in the satellite holdings at all. If you're not super comfortable with risk, stick with individual stocks, maybe some emerging markets funds, things that could grow a lot, but aren't as likely to have those crazy swings like those 3X ETFs.
This blended approach, I'm starting to see how much you can really customize it. It's
Yeah.
like building a personalized investment strategy based on your own comfort level and what you're trying to achieve. But with so many choices, how do you actually figure out what's right for you?
That's the million-dollar question, right? They really encourage listeners to do their homework, understand the risks and potential rewards of different assets, really think about how much volatility you can handle without losing sleep.
It all comes back to that knowing yourself thing. It's not just picking investments, it's picking ones that actually fit your personality, your whole financial plan.
That's it.
Yeah.
And they also point out it's not like you set it up and forget about it. Your portfolio, it needs to change as your life changes. You know what I mean? Maybe you get more comfortable with risk as you go, or maybe you need to shift to more conservative stuff as you get closer to retirement.
So it's about staying involved, always checking in, adjusting things based on what you need and what the market's doing. This whole blended investing thing, it seems like a really smart way to handle how complicated the market can be.
It's a good framework. Helps you make decisions, balancing those potential rewards with, that understanding that risk is just part of the game.
This deep dive has been really eye-opening. I really like how the podcast made us think about more than just chasing those big returns, made us really think about why we're investing and how much risk we can actually handle.
That self-awareness, like you said, it's the foundation.
Yeah.
And remember, investing, it's a journey. It's not a destination. It's about learning, adapting, making those smart choices that are going to help you reach your goals.